In a world striving for economic equality, a stark contrast persists between the wealthy and the rest of society. While ordinary citizens diligently pay their taxes, the ultra-rich employ an arsenal of legal strategies to shield their fortunes from the taxman. These strategies, often shrouded in secrecy and complexity, allow the wealthy to significantly reduce their tax liabilities, leaving the rest of us to shoulder the burden. This disparity in tax contributions raises fundamental questions about fairness and justice within our economic system. How is it that individuals with immense wealth can legally avoid paying their fair share, while others struggle to make ends meet? The answer lies in a complex web of legal loopholes, offshore havens, and sophisticated financial instruments, all designed to minimize tax obligations. The ability to exploit these strategies is not inherently illegal, but it exposes a fundamental flaw in how our tax system operates. When the wealthy can legally minimize their tax contributions, the burden inevitably shifts to the middle class and working families. Reduced tax revenue means fewer resources for essential public services such as education, healthcare, and infrastructure, further exacerbating the gap between the haves and have-nots. As we delve deeper into the world of tax avoidance, it is crucial to remember that this is not just an issue of legality, but also one of morality. Is it morally justifiable to exploit legal loopholes to avoid contributing one's fair share to the common good? This question lies at the heart of the debate surrounding tax avoidance. The line between legal tax avoidance and illegal tax evasion can be thin and often confusing. Tax avoidance is the legal utilization of tax laws to minimize one's tax liability. This involves strategically structuring one's financial affairs in a way that takes advantage of available deductions, credits, and exemptions. Tax evasion, on the other hand, is the illegal act of deliberately underreporting or concealing income to avoid paying taxes. Unlike tax avoidance, tax evasion is a criminal offense that can result in severe penalties, including fines and imprisonment. The wealthy often have access to teams of lawyers, accountants, and financial advisors who can help them navigate the intricacies of tax law and push the boundaries of what is considered legal. This raises concerns about the fairness of the system, as those with more resources are better equipped to exploit legal loopholes and minimize their tax obligations. The issue of tax avoidance, therefore, is not simply a matter of legality, but also one of ethics and social responsibility. It is essential to address this imbalance by closing legal loopholes, strengthening tax enforcement, and promoting greater transparency in the financial system. Imagine two individuals both residing in the same city and contributing to the local economy. The first is Sarah, a dedicated teacher who earns a modest income educating future generations. Sarah diligently pays her taxes each year, fulfilling her civic duty and supporting public services. On the other side of the spectrum is David, a billionaire entrepreneur with a vast investment portfolio and multiple streams of income. David, like Sarah, abides by the law, but his financial advisors have meticulously structured his assets to minimize his tax liability. While Sarah pays a significant portion of her income in taxes, David's effective tax rate is a fraction of hers. This disparity arises from the legal tax avoidance strategies employed by David and his team of experts. These strategies, while legal, highlight the stark difference in tax burdens between ordinary citizens like Sarah and ultra-wealthy individuals like David. The complexity of tax laws and the availability of sophisticated avoidance techniques create an uneven playing field, allowing those with more resources to pay proportionally less in taxes. The tale of Sarah and David illustrates how legal tax avoidance, while not inherently wrong, can perpetuate and exacerbate economic inequality. Tax avoidance is often portrayed as a game of skill, a complex puzzle that rewards those who can master its intricate rules. Wealthy individuals and corporations employ armies of lawyers and accountants to navigate this labyrinth, exploiting legal loopholes and deductions to minimize their tax obligations. One common tactic is to take advantage of tax incentives designed to promote certain behaviors, such as investing in renewable energy or donating to charity. While these incentives serve a valuable purpose, they can also be exploited by the wealthy to reduce their tax bills without necessarily aligning with the intended spirit of the law. For example, an individual might make a large charitable donation not out of altruism, but primarily to receive a significant tax deduction. Similarly, businesses might structure their operations in ways that maximize tax benefits, even if it means shifting profits to low-tax jurisdictions or engaging in complex financial transactions that lack economic substance. Another common tactic is to exploit differences in tax rates between jurisdictions, a practice known as tax arbitrage. This involves shifting income or assets to locations with lower tax rates, such as tax havens, while maintaining control and beneficial ownership. The complexity of tax laws and the constant evolution of avoidance strategies make it challenging for governments to keep pace and close loopholes effectively. It is imperative for governments to address these inequities by simplifying the tax code, closing loopholes, and ensuring that everyone contributes their fair share to the common good. The allure of tax havens has long been a subject of intrigue and controversy. Often depicted as idyllic islands with pristine beaches and secretive banking practices, tax havens occupy a shadowy corner of the global financial system. In reality, tax havens are not limited to exotic locales. They can be found in various forms worldwide, including small island nations, landlocked countries, and even within the borders of major economies. What unites them is their defining characteristic: a deliberate effort to attract foreign investment and capital by offering exceptionally low or even zero tax rates, coupled with strict financial secrecy laws. For wealthy individuals and corporations seeking to minimize their tax liabilities, tax havens offer a tempting proposition. By shifting profits, assets, or even their residency to these jurisdictions, they can effectively escape the higher tax burdens imposed in their home countries. The financial secrecy provided by tax havens further enhances their appeal, shielding their financial dealings from scrutiny by tax authorities, regulators, and even their own citizens. The methods employed by tax havens to attract foreign capital vary widely. Some offer low or zero corporate tax rates, making them attractive destinations for multinational corporations to establish subsidiaries and channel profits through. The existence of tax havens has far-reaching implications for the global economy and for the distribution of wealth within and between nations. The secretive nature of tax havens makes it difficult to quantify the true scale of their impact on global finance and taxation. However, estimates suggest that trillions of dollars are held in tax havens worldwide, depriving governments of much-needed revenue and exacerbating global inequality. When wealthy individuals and corporations can shield their wealth from taxation in secrecy jurisdictions, it creates an uneven playing field where the burden of financing public goods and services falls disproportionately on ordinary taxpayers. The use of tax havens is not limited to a select few ultra-rich individuals or multinational corporations. It extends to a wide range of actors, including high-net-worth individuals, small and medium-sized enterprises, and even criminal organizations seeking to launder illicit funds. The lack of transparency and accountability in tax havens creates an environment where financial crime can flourish, facilitating tax evasion, money laundering, and other illegal activities. The consequences of tax havens extend beyond the realm of finance and economics. By enabling the wealthy and powerful to avoid paying their fair share, tax havens contribute to a growing sense of injustice and inequality, undermining social cohesion and trust in institutions. Moreover, the loss of tax revenue due to tax avoidance and evasion can have a devastating impact on developing countries, depriving them of resources needed for essential services such as healthcare, education, and infrastructure. Addressing the challenges posed by tax havens requires a concerted global effort. One of the most common and effective tactics employed in conjunction with tax havens is the use of shell companies. These entities, often registered in tax havens, serve as empty vessels, lacking any real business operations or assets beyond a name and a registered address. Their purpose is to obscure the true beneficial ownership of assets, making it difficult to trace the flow of money and identify the individuals or entities ultimately in control. Shell companies can be created with relative ease and at a low cost, particularly in jurisdictions with lax corporate registration requirements. Once established, they can be used to hold bank accounts, real estate, yachts, art collections, and other valuable assets, shielding them from scrutiny by tax authorities and creditors in the owner's home country. The lack of transparency surrounding shell companies makes them an ideal tool for a range of illicit activities, including money laundering, tax evasion, and the hiding of assets from legal judgments. The use of shell companies is not limited to individuals seeking to avoid taxes or engage in illegal activities. Multinational corporations also utilize shell companies to minimize their global tax liabilities by shifting profits to low-tax jurisdictions. The proliferation of shell companies and their role in facilitating illicit financial flows has prompted growing calls for greater transparency in corporate ownership. The fight against shell companies and the illicit activities they enable requires a global effort to enhance transparency, strengthen regulations, and improve international cooperation in sharing information and combating financial crime. Tax havens challenge global finance. International efforts led by the OECD aim to enhance transparency and fairness. The BEPS project and Common Reporting Standard target profit shifting and hidden assets. Over 100 jurisdictions have committed, but the fight continues. The allure of offshore accounts has long been a cornerstone of tax avoidance strategies employed by the wealthy. Shrouded in secrecy, offshore financial institutions provide a haven for assets seeking to escape taxation. These accounts offer anonymity, making it difficult to trace the true ownership and origin of funds. Offshore accounts safeguard wealth from legal challenges, political instability, and economic turmoil. For individuals in volatile economies, offshore accounts protect assets from seizure or devaluation. The promise of financial privacy makes offshore accounts attractive for many. Complex networks of intermediaries help move funds offshore. Shell companies and trusts obscure true ownership, complicating efforts to trace funds. Lack of transparency in offshore jurisdictions enables illicit activities. Offshore accounts can facilitate international trade and diversify investments. However, secrecy makes offshore finance susceptible to abuse, enabling tax evasion and money laundering. Addressing these challenges requires global cooperation to enhance transparency and combat financial crime. The Panama Papers leak in 2016 exposed the hidden wealth of politicians, celebrities, and criminals, revealing a vast offshore industry. The documents showed how shell companies and offshore trusts conceal true ownership and origin of funds. The revelations sparked global outrage and led to investigations and calls for greater transparency. Subsequent leaks like the Paradise Papers highlighted the need for international cooperation to combat financial crime. The fight against financial secrecy continues, requiring sustained efforts to close loopholes and promote transparency. The consequences of tax avoidance extend far beyond the realm of government budgets and lost revenue. While the financial implications are significant, with estimates suggesting that governments worldwide lose trillions of dollars annually to tax avoidance and evasion, the societal costs are equally profound. When wealthy individuals and corporations are able to shirk their tax obligations, It undermines the principle of fairness and erodes public trust in the integrity of the tax system. The perception that the wealthy and powerful operate by a different set of rules breeds cynicism and resentment, fueling social divisions and undermining the social contract that binds societies together. This erosion of trust extends beyond the realm of taxation, impacting public confidence in government, institutions, and the rule of law itself. The sense that the system is rigged in favor of the privileged few can lead to disillusionment, apathy, and a decline in civic engagement. Moreover, the loss of tax revenue due to avoidance and evasion has tangible consequences for the provision of public goods and services. Governments rely on tax revenue to fund essential services such as healthcare, education, infrastructure, and social safety nets. When tax revenue is depleted, it limits the ability of governments to invest in these critical areas, leading to a decline in the quality of life for all citizens, particularly the most vulnerable. Furthermore, the burden of tax avoidance falls disproportionately on those least able to bear it. As wealthy individuals and corporations exploit loopholes and shift profits to low-tax jurisdictions, the tax burden shifts to the middle class and working families who rely on public services the most. This widening gap between the haves and the have-nots exacerbates income inequality, undermines social mobility, and creates a vicious cycle of disadvantage. The intricate world of tax avoidance involves manipulating asset values to minimize tax liabilities. By depreciating assets and inflating liabilities, individuals and corporations can reduce their taxable net worth. This strategy highlights the complexity of tax avoidance and the challenges for tax authorities. Philanthropy, often hailed as a noble pursuit, has also become a tool for tax optimization in the hands of the wealthy. By strategically structuring their charitable donations, individuals and corporations can reap significant tax benefits. Donating appreciated assets like stocks or real estate can avoid capital gains taxes. Establishing private foundations offers control and tax benefits. Critics argue this system allows undue influence and lacks transparency. Reforms are needed to balance genuine philanthropy and tax accountability. A system under strain. The societal impact of tax avoidance. Tax avoidance strains social cohesion, erodes public trust, and widens inequality. The wealthy sidestep obligations, breeding injustice and resentment. This undermines the social contract and stagnates social mobility. Reduced tax revenue impacts public services, education, and healthcare. The very foundations of democracy are shaken. The shifting burden, tax avoidance, and the shrinking safety net. Wealthy individuals and corporations minimize taxes, impacting the social safety net. The middle class bears the burden, funding essential programs. This leads to cuts in Social Security and healthcare. Retirees and families face economic insecurity. Education suffers, limiting opportunities and growth. Tax avoidance undermines society, exposing the vulnerable. Restoring fairness calls for reform and increased transparency. The global movement for tax reform demands transparency and fairness in the financial system. Citizens, policymakers, and business leaders call for a just tax system where everyone pays their fair share. Greater transparency in financial dealings is essential to deter tax avoidance and restore public trust. Closing loopholes and promoting a fair tax code can fund essential services and invest in citizens' well-being. A global challenge: international cooperation in the fight for tax justice. The fight against tax avoidance is not a battle that can be won in isolation. International cooperation is essential to curb tax avoidance and ensure fairness. Transparency and harmonized tax rules are key to a just global economy. Organizations like the OECD and UN facilitate global tax justice efforts. The fight for tax justice is a global challenge that requires a global response. By working together, nations can create a more equitable economic system. The time for action is now, for the sake of our shared prosperity. The moral imperative: rethinking our relationship with wealth and taxation. Our tax system, while legal, often allows the wealthy to avoid their societal responsibilities, leaving the rest to bear the burden. This isn't just an economic issue, but a moral one, questioning wealth, responsibility, and justice. Exploiting loopholes erodes fairness and undermines our social contract. Taxation reflects our shared responsibility to maintain society. It's about ensuring economic growth benefits everyone, creating a just and sustainable future. Towards a fairer future, a call to action for tax justice. The path towards a fairer and more just tax system will not be easy. It requires a collective awakening, a recognition that the status quo is unsustainable, and that we have a moral obligation to demand better. This is not a partisan issue but a human one, transcending political ideologies and uniting us in a shared pursuit of a more equitable and sustainable future. The time for complacency is over. The time for action is now. We must demand greater transparency in the financial system, shining a light on the shadowy world of tax havens, shell companies, and complex financial instruments designed to obscure ownership and facilitate tax avoidance. Sunlight, it is often said, is the best disinfectant. By exposing these practices to public scrutiny, we can begin to dismantle the structures that enable tax avoidance and hold those who benefit from them accountable. We must push for comprehensive tax reform, closing loopholes that disproportionately benefit the wealthy and ensuring that everyone, regardless of their income or status, contributes their fair share. This requires a fundamental shift in our approach to taxation, moving away from a system that rewards wealth extraction towards one that encourages investment in the common good. We must embrace international cooperation, recognizing that tax avoidance is a global problem that demands a global solution. The ease with which money can be moved across borders necessitates a coordinated effort to harmonize tax policies, share information, and close loopholes that allow individuals and corporations to exploit differences between national tax systems. This is a call to action for all who believe in a fairer and more just society. Engage in informed discussions, challenge the status quo, and demand better from our elected officials. Support organizations working to promote tax justice and hold those in power accountable. Together, we can build a system that works for everyone, not just a privileged few. The path towards a fairer future begins with a single step. Let us take it together. Towards a fairer future, a call to action for tax justice. The path to a fairer tax system requires collective awakening and action. Demand transparency, expose tax havens, and push for comprehensive reform. Together we can build a system that works for everyone,